Hey, good morning.
Good morning.
How are you?
Good. How are you?
Better.
Yeah, I bet, man. I'm sorry to hear that.
Had a little bit of the 12-hour flu going through our family, so it's been got my son yesterday morning, got me in the afternoon, and man, but it's done its thing and it's over.
Kids are back in school.
Kids are back in school. Great to see everybody. Let's get rock and roll and get into some questions. We've got a number of things to cover this morning, and have also some questions that were pre-submitted that we'll get to those too. And excited to see you. Happy Friday. Start off with a reminder of risk. I mean, you likely know this, but hopefully, anytime you place a trade or you're learning to trade, there's lots of excitement around learning to trade because of the opportunity, because it can be fairly lucrative. It can also be very risky. So please be mindful of the risk. It's one of the few things in the markets that you can actually control. At the top, one of the things that we talk about that's distinctive, and this is from our buddy Tom and Corby at Blue Tree Strategies, former hedge fund manager, is that fundamentalists interpret balance sheets, technicians interpret price, and profilers interpret behavior. So when we would describe our approach to markets, we're essentially behaviorists. And what we're doing is we're graphically interpreting the behavior that you would have seen if you were on the trading pits in Chicago, or if you're on the floor in New York, where you would see other traders. So now that everything's gone electronic, the same human behaviors are present. We're just having to read it a different way. So if you're a fan of the Matrix movies, where they're looking at the Matrix, and it's kind of what we're learning to do, is we're learning to see behavior in the charts. A couple introductions, just real quick. Haven't met, my name's Josh. I'm the founder of Trade the Profile. We've been at this game for a couple years and continuing to move forward at building a process that really didn't exist for myself as I was trying to learn how to trade. I came to trading by accident. Kind of a friend introduced me to it, and like, where do you go to find information? The floors were largely shutting down, so it wasn't like I could go to the floors and learn that way, as many people have done that are pro traders. JP's also with me, and between the two of us, we're working at putting together a process of development that allows traders to systematically move forward towards consistency. And that's really what our process is we've honed everything over the last couple of years into something we call the Profile Trading Development Pathway, which is we take everything that we understand about the auction process and how that works, and we distilled that down into 16 core principles that all orbit around these three focus areas. That there are really just 4 behaviors observable in every auction, and you need to be able to observe them, call them out, see where they are, know which one leads to another one. That is a beginning, move, rest, test. That's it. I mean, those are the 4 behaviors. 4 questions to ask before entering a trade and how to answer them. What is the objective target? Why am I interested in this trade? What do I hope it will? What's the outcome of it? And then what am I willing to risk for that? And then what would tell me that I'm right? What would tell me that I'm wrong? And then the last is the 4 stages of auction competency and how to know which one you were in. And this is really to help you understand, where am I at in my development process? What do I yet need to add into my approach so that I can move towards consistency? And we do all of that. We demonstrate that and how to put that into a plan. We believe very much in the idea of a plan. So every day we publish a trade plan that we then discuss with our development community. And some of you are part of that community and know how that works. But it's meant to take these vague concepts and actually put them into action where we're actually working on the trade. Because at the end of the day, it's got to be a trade. I could, if I can read an auction and don't place a trade, then what use of this? This is the idea of being able to approach the market, be able to generate my own ideas, be able to express risk around that and succeed. So with that little commercial over, maybe when you signed up, you knew that we talked about this. You're talking about this number, 2976.25, and why that was going to be important today and what that represents. And so I want to kick off our discussion by just looking at this and why this number is here and how this can help you as you plan each trading session, and looking at the profile as a tool to help arrange the auction behavior. And then after that, we'll look at any other questions that you have. But I'm going to just get over here to my screens real quick and let this refresh. Okay, so we've got 3 products here that we're looking at and profiling. We've got crude oil on the left, we've got NASDAQ futures in the middle, and we've got the ES on the right. And I'm going to actually blow up the ES here so we can just look at this one. So if you're new to profiling, a couple things that are of interest and of note. I just want to check one setting here. Yeah. I'm going to walk through the anatomy real quick, and then we're going to talk about this number. Okay, so this is the market profile graphic. That's yesterday's session. This is the session that we're currently developing. This is the overnight session. This is a volume histogram. So this is showing, you know, the wider this is, the more volume transpires at that price. All right, everybody tracking so far? This yesterday, and all this is doing is it's just arranging 30-minute price data, the range of those prices. And then the A and B period here, that's what together we consider that the initial balance. That's the first, this is a range of the first hour of price. A little bit of an odd day yesterday. 97% of the time, over 1,000 trading sessions, we will exceed that range of price. We did not yesterday. We stayed completely inside of that, and largely stayed on the sidelines as a result, because we often play off of extension around that initial balance. You can see we're extending it here in C period today. The color and the difference here shows us a couple things. So one, the color shows us the intensity of volume at price, and then so the white is lower volume, the magenta is the higher volume, and then the highlighted green here is the volume point of control, and then the B, C, D, E, H, where that changes, basically shows you how the volume point of control migrated throughout the day. But this this 29, it was off a little bit, 2975.50. So I thought it's 20. Must have been looking at a different platform. 2976.25 is the most traded price of yesterday, and you can see that very round profile. So what you find in the auction process is the auction will, you know, start and open, and then it will just, you know, rotate back and forth until it can develop value. So you know, the auction will come in with the perception of value from a prior session, and then it will discern whether it wants to interact with that value or establish new value. Now, yesterday, we actually had a gap higher. And if I zoom out here real quick, you'll see that we had this massive move overnight on news that we were going to have resume trade talks in October. So far as I know, that's still in the play, but that left value from the prior day, and then we reestablished value for today. So today, as you come into the auction, the most present reference of value to look at is this 2975, 2976 area. And you could be precise to the actual tick, because there is one price where more volume occurs than any others. And then specifically when it is very pronounced like this and very round, think of it like a magnet. So like even this morning on the open, we opened a little bit above this. If I and this is one trade that I did take this morning in the NASDAQ. I didn't take it in the ES. But when we opened inside of the prior day's range, we tested a little bit higher and then came back through the open. It's a pretty quick trade back to test that prior value. So as you know, as you're planning your session, where you open relative to the prior day's value gives you information, and it can be something as part of your plan. And then, however we accept or maybe extend the first hour's range relative to that level can suggest where we might go next. So now that we've extended the IB high above this price, this is queuing up the conditions for, you know, an additional push and acceptance towards higher prices. And I've got some decision levels at $29.95 and up to 3K and so forth. Now, given left to its own devices, that's now the path of least resistance. So as long as we hold yesterday's value area, and we've now, you know, somewhat accepted that, you can see this histogram is building out a composite between the two sessions. So there's now a significant node here at 29.78, and so just color this real quick. So that now becomes a level to defend if you want to look for 29.95, 3K, and so forth. Now, it is a little bit wonky today because we have Fed Chairman Powell who's going to speak at 12:30 Eastern. So that is likely to impact the markets, and that's why we're also, you know, trading inside of the range. We're actually still trading inside of the overnight range. So there is a move coming, probably even yet today, but nobody really wants to take a big directional bet because they don't know what Powell's going to say. So, in fact, we didn't even really get a big move on non-farm payrolls, even though that happened before the auction or the open this morning on the equity side, because, okay, non-farm payrolls is one thing, but what is the Fed going to do relative to rates in response to that? So had we not had Powell speaking later, probably would have been a bigger reaction off of non-farm payrolls. The fact that we have Powell speaking, that mutes non-farm payrolls impact, you know, and now we're waiting. Now, if after Powell speaks, we'll kind of see where we are relative to this 29.78. If we're above it, then that could, you know, allow us to drift the rest of the week higher into Friday's close, expect higher prices next week. If we get below this 29.78, in fact, if we get below 29.72, then that area of volume and inventory at 29.78 will be resistance for us that you could lean against. And then now we've got all kinds of spots in the auction below us of really, nobody really knows that those are valid auctions. See how thin the profile is here. We basically, all week's been a gap and go. We'd gap overnight. So we'd balance, gap, balance, gap, balance. So what's been, you know, there are a couple of mechanics have been driving, you know, why are we breaking out and all this kind of stuff, you know, what's changing in all of this. Some of it is the fact that we were in a larger area of value and what we call a bracket of price right around that 29.40, and sellers have been accumulating stops above that. So some of the violence of the move this week has been to run those sellers out. That's part of the game is to run stops. Particularly, love to do that overnight too, because it makes everybody panic. And so that's at play. The other is there's a perception of value is higher if some of these long-standing macro trade stuff can be resolved, right? So that's the only reason that you would buy up here. We're actually trading. You can see these larger nodes that exist below us. Those are references of value across multiple time frames, and they are all bigger even than where we are. In fact, if I go back to the beginning of August and we update the picture, you're going to see how thin where we are is relative to where value has been. So, I mean, really, last month or so, 29.25 is the better value reference. So we're actually moving away from that. How you use that as you're approaching in your plan is you say, okay, well, I know how auctions work. How do I want to place a trade relative to value? And so we use value across multiple time frames. Whether, and the first reference is always yesterday's. That's the first reference of value that we have until new value is established. So this week we've been establishing new value every day as we've been gapping and then holding those gaps. But if I hold that within the context of where value has been over, the last month and last week, we're above value. So, think how you would respond to that. If you're above value, do you want to buy above value? If you do, where are you wrong? What is the target upon which that you believe that you want to buy above value? That'd be like me saying, hey, I'm going to sell you my house and you can buy at 10% all the comps of the neighborhood. Are you interested in it? You would have to have a perspective of future value in the home that makes that purchase accurate, and financial markets operate no differently. Okay, so that's why that level is important. It was a very, we gapped yesterday, we bounced very, strongly around that level, and we're continuing to be in the ballpark pending whatever Powell's going to say this afternoon, and then we'll see. we'll see where we are, and then that could be an area that we could use as risk. So that means if I was going to be long, that'd be an area that I would defend, because if we don't hold that level, the larger magnets of value could pull lower. I could be underwater really hard. If we get below that, then I can use that as risk to the upside to defend, to go back towards longer term value. And then inside of that, you can determine, well, what's my time frame of my trade and so forth. Okay. All right. Well, that's to kick it off. I know that there were a number of you that asked some questions about just using profile in specific and how it is. One question that we often get asked has to do with, hang on one second, let me put this back. Market profile versus volume profile. And volume profile helps us discern levels where we expect certain behavior. The market profile and how these TPOs are arranged throughout the day help us do a couple things. Help us measure behavior and expectations of what's likely probabilistically. I mean, the fact that we've actually traded above the IB high today so far in the ES says now there's only a 30% chance that we will trade below that 2970. So there, we have reduced the probability. And if Powell wasn't speaking, you'd probably stick in that direction. And this is also an open auction in range. That's a day type, which means that we really don't have any directional conviction at the moment. Whereas crude oil has gapped from its range yesterday, and is going back and forth, and that's what we call an open auction outside of range. So that's basically saying there's a directional conviction to the short side. So be careful if you're going to be long. About 5 different day types that you can look at that help set some conditions for where you're going to be. And so like the lines that you see on my charts, these are areas where I'm interested in, I'm expecting some type of behavior. I'm interested in them based on how I'm seeing the market profile develop, and that they were part of my homework before I came in. So I draw all of these before I even get into the session, and then look to interact with them as we go. Now, did I? Hang on a second. Okay. So are we going? Man, we got right down to that 80 area, and
yeah. Hey, somebody's asking about your bands on the charts, Josh.
Yep. Yeah, though they're not VWAP bands. It's the developing value area. So it's showing you there's the green is where the volume point of control is, and so you can see how value is migrating throughout the day. So you can see that even though price is moving higher, so far value's been kind of sideways to a little bit higher, but it's going to help you kind of smooth out and pick out the direction. No, that actually is that's a feature request. I do use VWAP on this daily bar here. So this is VWAP for the session right here. I would love for Terry to add 2 standard deviations of VWAP, kind of like this, so that I can see that. That would be great. Let me talk okay, let's talk crude real quick. So crude is still inside of its initial balance. Let me just talk some ideas that I have around that. If we were to take out the IB high here above 53, couple things there. We have this gap. We have a big level here that we gap below at 56.25. So a level that I gap below that then becomes an area that I can test to the upside. There's also single prints. So there's a zone here where there's single prints. There's a zone here, a zone here. Those could all be upside targets. And what's attractive to those is we could get to those today and not add any additional range. So we've already exceeded the expected range in crude oil today. So not really expecting much to the downside. In fact, I was looking to see if we could get to 74. We've got a prior naked point of control, actually right in here, that's not tested, that I was looking for us to test that and then potentially rotate back to 55.25. If we take out IB high, then the trade that I would look for today, so like if they trade here, I'll look for them to trade down to value and then look for some of these levels higher. If they give me a chance to pull back here. If they don't and they just trade up into these, then I may look for, because it's very unlikely we're going to close the gap, I'll look for the buyers to fail kind of in this zone, and then I'll look to sell it back towards 55.20 would be my target. So that's the idea that's there yet in crude oil. And that's a trade. I think Carlos, you're asking about like day trading ideas in crude oil. I mean that's not just a crude oil trade. That's any trade, any product, looking at IB extension, because there's about if I go across all products, you go back 1,000 trading sessions. If I take that initial balance range and then I extend it another 0.25%. Or another or 50% extension. So 50% extension probably gets up to 55.85. Once we take out the IB high, which there's 97% chance we'll take out one of the IB extremes, then there's about a better than 20% chance that we would get to 55.85. There's about a 50% chance that we'll get to 55.65. So decent probabilities that we get to those, and they're interesting targets. It's also why, because of those probabilities, I'm not that edge. I'm not going to just I wouldn't like just buy up here at 55.55, because they could extend this and then rotate all the way back down, and then I'm 50 cents underwater. So that's why I would use today's value as a place to buy, because I want to buy at or below value if I want to go with these people that are extending the initial balance. Or I'll just sell against them once they've run out of steam, is the play. So there you go. So we got IB high extension now in crude. So now I'm going to look. I'm going to change this over to a little 5-minute.
Everything feels like it's just on hold today, doesn't it?
Yeah, it really does.
It's crazy.
All right, so and we may have trouble getting past this 55.45. That is a high volume node from this session here.
Yeah, we're just right in the middle of the muddle. If you go out and pull out a daily chart, we're balancing in here big time on this stuff, and
yeah, we've been in a balancing range for some time here. well, hang on a second. Actually, most recently, this has been the range. So that 55.35 area, right, kind of where we are, is smack dab in the middle of this, large balancing range. In fact, if I go back here, so 56.45 is where we came from. Yeah, we're very much in the muddle. The great trade, while we're kind of waiting for this to see if they can do their thing. We had a really nice trade yesterday in EIA. So EIA was on Thursday. It's typically on Wednesdays, but let me just expand this profile here. And then I need to add. Should turn this on to yesterday as well, and then we'll be able to see that. So just a second, this will redraw this. Okay, so here's the expanded view. First hour's range got up to 57, and then you can see this big spike right in here. That was the release of EIA. And so typically on an EIA day, I mean, this could be an FOMC as well, but you're looking for an attempt in one direction that then fails. And what I was really interested in was that they had this big move up here above the 5620 area, which I don't know if you follow us on Twitter, you knew that opened the door to get to 57.58 area, which we got up to there. And then at that point, after making a 7% move in 4 days, we had really trapped some longs. So this is what happens when you buy above value and you don't know the profile to know where you are. So we were above value. That 56.25 was a node again. Yesterday they went sideways, attempted here, and then right here. See that? That right there gets you really excited. And it gets you really excited because, okay, here are these people that have bought on an economic event after 7% move, and they didn't get higher prices. So that impulsive behavior should get higher prices. You should get trading above 57.76. In fact, we don't. We come in, and then it looks like they're going to make new highs, and then they immediately get taken out. And this was on big volume here. So then on the next 5 minutes, when this held, when they broke the low right here, right in this area, this 57.30 area, that's the short, and the initial target was back to this area right here where we had balanced and built out some volume. That was actually where the point of control was. You can see the point of control was down here, so that was the day's value, and so we were looking for return to value. So that's the target. Initial risk is the high of where that base started, where that selling started. So basically, if those sellers get nervous, I want out as well. And then as we started to break down, so once we made new lows here in the 5 minute, then we could bring the stops down here. Then we broke down here, then we could move the stops down here. And then once they rolled and made new lows again, then we could move the stops here. And we just kept trailing this thing, got to target one. And, if you had multiple contracts, you're peeling them off. Peeling off half, still leaving some up here. And then when they rolled back, they got all the way back to our second target, which was to 56.20 and long-term value where they paused. And that's where we covered. Like I was completely flat by the time we got there. that was the trade of the week. So we essentially captured from 30 to 26.
Yeah, for sure. And there's going to be weeks like that where you're going to have one trade for the week. I mean, unless we're really lucky and we have a phenomenal week with lots of volatility and stuff, but most of the time it's going to be one or maybe two good trades a week, and that definitely was it for sure.
Yeah, that made everything worth it. The rest of the week was kind of junky and hard, and
yeah,
and that was really, really nice.
There wasn't a lot of forcing to that trade.
Mm-mm.
And we like to talk about let's just go back. Trading isn't about just constantly clicking the button and getting in and out of trades. I mean, you're just going to run yourself up the wall stress wise, and then you're going to run yourself out of money. Trading's about waiting for your plan to develop, your setup to develop, and anything in between there is just impulsive behavior. And that's the tough part about trading, is you have to control that impulsive behavior. And so we waited a long time for that trade. It wasn't days wise, because we weren't looking for that trade for days, but yesterday we had to wait for that things to set up for us on that, and it worked out really, really well. So
yep.
And Josh was so happy afterwards, he went and got sick.
Yeah.
Too much celebrating.
Too much celebrating. Yeah.
It was the beer bug, wasn't it?
No. That's good. So any specific products that y'all are trading that you want to take a look at? Happy to do that. I mean, so we look for day trade opportunities in the NASDAQ and crude oil. We also look for opportunities across a number of other products, based on where they're in, specific relationship to price to value. We took a trade in the euro this week. We took a trade platinum out of that relationship, but I hardly ever look at platinum. I don't look at the euro very often. And so those are more, swing trades, or they're a day trade when certain conditions are met. But if there's a specific product that you want to look at, or, have us pull up, we're happy to do that. Or if there's something else, another question you had about profiling, we're happy to do that as well. All right. Is it the Russell? You looking for the Russell?
Our favorite.
Oh, okay, cool. All right, we'll get here really quick looking at on this platform here. So this is just Thinkorswim. Not a great platform for profiling. In fact, you can see it can't even draw. Yes, I use Thinkorswim for a lot of alerts. It does have very rudimentary profiling capability. So if you're not willing to, or not ready to invest in good data and platform, it's a great place to start, and it's a great place to set alerts. We use a lot of alerts because there are certain prices we want to be active at and certain prices we don't want to be active at. But let's just look here. I'm going to go to a different template. Where we can kind of look at a couple different things here. Again, assuming that it will pull it up. Thinkorswim has been kind of buggy today. I might just have to restart it. Hang on a second. While we're doing that, let me put this back.
And while he's doing that, if anybody has any other questions, just pop them in there.
Go ahead and queue them up, and then we'll get to them.
Yeah, just pop them in there. Anything's on. Okay, first of all, there's no stupid questions. Josh and I know this stuff for two reasons. One, we've been doing it for a long, long time, and two, we've made every mistake in the book. So, there's no dumb questions. We'll be the first to admit we've probably made every question or made every mistake that you can think of. And that's sort of the development of a trader. So go ahead and pop any questions in here. We won't say your name if you don't want us to, but if you have a question that you really need answered, we'll be glad to do our best on it. So, and if not, we're just going to We'll just take that as you probably already know everything.
Yes, yes, you know it all.
And if that's the case, you must be on your 60-foot yacht somewhere in the Caribbean or Mediterranean, enjoying the life.
You have full wisdom.
Yes. And it would boggle my mind while you were on our phone call.
So while I'm pulling in data here for the Russell, so I do have this long-term chart on the Russell, and one of the things that I've been immediately, we've even been talking about this for some time, is the fact that the Russell is in what we would call it's an imbalance. It's a balanced auction, and really, unless we get below 1450 or above 1600, it's going to continue to play this back and forth game that it's been playing. Now, definitely pay attention to what happens at the extremes. That could, predict the next move. And I think I believe if we can get above here, there is an area of volume up here that would be the first target. And then if we break down here, there's an area of volume down here. Let me show you what those all look like. So if I highlight this one, you can see that's where that is. If I highlight this area, you can see the volume that's down there. And then if we go across this big balance area, you're going to see the really significant level in the Russell emerge.
Yep.
Is right here, 1565.
So let me make a comment about the Russell. The Russell is one of our favorite indicators in some respects. And I'm going to say that, I want to say that loosely, okay? Because the Russell is a larger basket of stocks than all the other indexes. So it takes a little bit more for the Russell to do anything. So it has to have a lot of support and a lot of, it has to have a lot of other stocks moving in the same direction to get the Russell to move as an index. So while all the other indexes were making all-time highs, the Russell was going sideways, as you can see on Josh's chart here. So what was that telling us? Okay, who's correct and who is not correct? And you can see we poked down below that area a little bit, and we're back in the middle of that mess. And we're still nowhere close to all-time highs, which is, gosh, what is the all-time high? Just a second, it's way up there. 1745. We're currently trading at 1516. So we're a long way away as opposed to what the other indexes are. So what we do is we keep an eye on the Russell just to see if it's participating. And a lot of times Russell does not participate. It has a mind of its own sometimes. But we do like the Russell. We watch it quite a bit. We don't trade it. It's a pretty thin trade still. And when we mean thin, that means there's not a lot of volume in it yet. When they moved from the ICE exchange over to the CME, the volume never caught back up, and I don't believe it's still caught up. I just don't watch volume on it. So
yeah, I did trade it a little bit yesterday. I can just show you the trade that I took. It was a little bit of what we call a structure cleanup trade. And if you look at most profiles, ultimately if you see this overlap taking place, get the crude here because crude's getting into an area of interest.
There it goes.
So there's your extension.
Could pop back into yesterday's range.
So here's this is what we call a single print from 1505 up to 1516. When they took out the IB high and then came back in and got below this, this was the opportunity, was the cleanup of that, and they rotated all the way back down. I didn't get the whole thing. I got about half of that, and got in on around 1519 was where I was looking for, and I was using the risk as the high of the day. But that was a trade. I'm with Jeff. I don't often trade the Russell. We do watch it all the time. All right, so crude is punching higher.
Chewy punched it.
They punched it.
Yeah.
Back into the gap. So this 50, so they're cleaning up some structure, these single zones. So that's single from prior auction. So these are potential targets. And again, if we can get up here like 56, I'll look for this thing to exhaust. They're moving price today away from already established value for the day. So there's some price to value divergence. If this gang can't get follow through, watch them rotate back down to 56.20. So, and in fact, I like it. The further that they push away from this, the tastier that trade is.
No pun intended.
No pun intended.
So if they pop it here, if they pop it, then we've got a little bit up above here, around that. What number are you looking at? Pull up your oh, there you are. Yeah, so if we pop it, then 56.20 area is going to be probably where they're going to head this. We do have some singles up there.
Yep, that is true.
Actually, that's where we broke down from yesterday. So
yeah, so we keep going back and forth around that 56.20 level, and we could get to 56.20 today. That's certainly possible. We would not require us to add any range, and that's, since we gap below that, that's also a potential place that I might look for. You know, if we trade all the way back up there, I mean, look at how much divergence that is between there and today's value early on. There's opportunity to the downside. So
yeah. Okay, we have a great question. This is probably one of the better questions we've had. Not to say that any of them are not any worse, but this is a really good question. So the question is, can you talk about journaling and maybe show how you do your journal for your trades? So let me talk about two different things here. There's journaling and tracking. I track every trade. I've tracked every trade for the last 12 years. And then there's journaling. And when I say tracking, entry, exit, and the setup and maybe some notes. And I use I have a pretty large spreadsheet that I use for that. And then there's journaling. Journaling I don't do anymore. And the reason I don't is because I've been in this game a long time. And I've come to that unconscious competence level. And we haven't talked about that. And that's something we discuss in our pathways call. But I'm at that level where I don't really, I guess it's like driving a car. I don't think about starting it. And I don't think about, putting it in reverse or neutral or drive or whatever. And so I don't look at that. Now, if I'm in a period of struggle, knock on wood, I haven't had one in a long time, then I would maybe start to journal what I'm doing. Okay. In your journal, if you're a new trader, I highly, highly recommend it. And when I journaled for probably 6 straight years. And there's 2 keys to journaling. In my opinion, that you're going to probably find some, trading psychologists out there that have other opinions. But in my opinion, journaling is about talking about how you're feeling during the day, during the trade day. Are you controlling your emotions? Start to jot down things like, if I feel antsy that I want to take a trade and there's no setup, what do I need to do? And then also how you felt in a trade. Now, you don't want to journal while you're in a trade, of course, but if you are, after the trade has been closed out or you got a free trade on board, it's important to journal what your thought process was. You have to go back through that and think through that. Okay, so what you're doing is you're breaking down what you may be trying to do. So let me give you an example of that. So you get into, let's just say this crude trade. Let's say you took the crude trade on the IB break here. and you get on and you're like, okay, well, this thing is, trying to break in, but it's sucking back a little bit. I'm worried it's going to roll over a little bit and stop me out, and I don't want to take a loss. And boom, you jump out of the trade, and next thing you know, we're up here trading at 79. Looks like we're going to hit 88 here shortly. And you've just left a lot of money on the table. And you want to journal those feelings and understand why you're having those feelings and what you need to do to change those feelings. In other words, was my setup correct? Okay, was it an actual setup? Was it a plan that I put in place to take advantage of? Was my risk reward there? And then if you answer yes to a lot of those questions, and the question is, the only thing you have to do now is trust it and accept it. Okay, Mark Douglas talks about that in one of his books. He talks about accepting it and trusting it. You do your work, you trust it, you have your setup, you have your what we had our plan this morning. And if it doesn't work, well, that's just one time it doesn't work. Okay, on to the next trade. And so the journal does that. I think it's highly, highly important for new traders that haven't been trading, even older traders. So if you've been trading less than 10 years, I highly recommend it. And I recommend it on a daily basis. You don't have to write a notebook. This isn't 5 pages of handwritten notes. I'm talking about a paragraph or a couple sentences, how you were feeling. And then go back at the end of the day, and definitely go back at the end of the week and see your progression. And then at the end of the month, go back and see. And if you're starting to see patterns there, okay, because remember, we're behaviorists and we sort of see the patterns of the market, right? If you start to see patterns here, you need to hone into those. Now you can, you can reach out to Josh and I, and we can work through those things with you, or you can, buy a book. I don't think only a book. You have to really work on this. You're not going to read a book and go, hey, I'm fixed. But you need to work on this, and you need to seek somebody or some counseling. And I don't mean, hey, you need to go see a psychologist, because that's not it. I mean, this is a different ball game, because it requires patience. It requires, you to trust things that you really don't have any control of. Okay. We have no control if the price goes up or down from this point. That's not our control. We don't move the markets. We don't have enough. First, we don't have enough money to do that. Two, we can't trade enough to do that. What we can control is how we're analyzing the setup. Do we have a setup, and how do we manage our risk on that? And that is the big thing. How do you manage your risk? If that's the case, and you got it all set up and you checked all the boxes, then you have to trust it. And if you don't trust it, then it may be time to stop trading for a little bit and explore that side of it to get better. That's what journaling will do to you. It will uncover the things that you may not see on the surface. And again, that's why we go back and read those things. So Miguel, awesome question. We could talk about this for probably an hour. I'm not going to do that, but and then the spreadsheet. Yeah, I use a spreadsheet. There's no one right spreadsheet. Basically, it's entry, exit, stops, and then try to figure out your risk reward on what we call R factor. There's a lot of stuff written on R factor. We don't really go into it much. As far as that's, we got to make sure your R factor is X. We just need to have a multiple of your stop for your targets. Okay. Now, what we do talk about, are your multiples of your stops realistic or not? Okay. Because we see that a lot too. And maybe Josh can speak to that, but we see it to where somebody goes, well, my stop was down here at 20 points, but my target was up here at 70 points. Well, there's no way it's getting that high. Okay, we have nothing up there to state that price could possibly go that direction. Okay, or even get to that level, because we like what Josh and I just talked about, we could get back to that 56.20. Why did we say that? Okay, why we said that was because we have a very high volume node right there. That's where business had been done, and the pattern of the markets and the behavior of the markets is we break from balance. What we just did is we broke from the IB, and now it auctions, and it's looking for one of two things: a place to rest, okay, which would be a balance area, or they're looking for the opposite to come in, which would be sellers, and that 56.20 is where sellers were at one time. And so we may use, that's probably a magnet. So if this thing does pop and keep going, then 5620 is really highly probable. So all right, long answer, but to a really good question. Thanks for asking that.
This other question, Miguel, about leak finder. So here, I mean, here's let me just show you one of the templates that we've used that's got some trade data in here.
What's the point of the spreadsheet?
Yeah, so here.
I'll answer that in one question or one answer, but I want you to show ours as well. I'll answer that this way. You're going to see right away if you're taking impulsive trades, because you should be marking those. And if you are, then you need to fix that quickly.
Right. So the so a couple things how you can help identify leaks. So one is to identify and name your trade. So for example, like if you have in your trades playbook. So every trader has a playbook of trade setups, that actually has a name. So if I look at my spreadsheet, I can see the names of the different setups. So those are they're all conditions around that I know what that trade is and I know what I'm looking for, that I can name it. And then I have belief around that, whether back tested or something that tells me why that setup has edge. And then before I put that trade on, I go through those 4 questions of, what's the opportunity? What am I willing to risk? What would tell me that I'm right? What would tell me that I'm wrong? That helps me identify that. Then when I go to the spreadsheet into the trade, part of the what's the opportunity? That's my target. What would tell me that I'm wrong, or what am I willing to risk? That's my stop. The R value then calculates, and I try to keep it where it's 3. That's why it's conditional formatting. So if it's above 3, it's green. That's good. I was doing a really good job. If I have a long period of yellows, that says I'm not as good at picking the risk versus reward. And so that's a place that I'm always trying to go back to. And then look at the entry price. Max favorable excursion and adverse excursion is a good thing to track. That's basically like, are you picking trades? Because you could pick a trade that could go for you, but it was a bad trade. There's a challenge. Like you could pick a trade that goes for you, and you actually had some time where it was in profit, but that was still not a wise trade to take. But if you go back and look at, oh yeah, you can that's why you have the different setups, because then you can go and you could filter and you could run queries on these to know, oh man, like my playbook, I should really focus my effort and my size around this setup because I'm doing that really well. This setup I'm struggling with, so I'm going to maybe do some more homework on that. Spend some more time looking around the edge before I put that in my playbook.
Yeah, one thing I want to add to that, Josh said something very, very important. Can you pull that back up, please?
Yeah.
Listen, this is the one thing again, we tell you this all the time. The one thing you can control is risk. And a lot of people ask, well, how are your setups? What's the probability of your setups? Are they 70%? Are they working 70% of the time? Just to be real honest, some of the biggest traders I know trade at 40% accuracy, but they make a crap ton of money. And the reason they do is because they have their risk reward done. So when a trade doesn't work, they're out of that trade. And when it is working, they're pushing, like yesterday. Okay. Now I had to jump out of that trade because I was leaving my office. And so I didn't get the full extent of it. Okay. So here's the deal. If I go out and trade crude and pick off crude for $100 for about 3 or 4 times, and I've got 100% win rate, okay, you made $300, but what if next time I trade, I let one get away from me and I'm hoping it comes back and gets me, and now it's $500 against me, it's $600 against me, and finally the pain is too great, I hit out of it, and now I've taken a $700 dinger. Well, I still have a winning percentage, right? I've won 4 out of 5 trades, but I have a big loss on the P&L because I didn't manage my risk right. So when you wrap your arms around the fact that we have to manage risk correctly, then the focus comes in executing the trade based on what we've talked about here and a few other things about your setup, about your plans and your rules and stuff like that. So that's why we use a spreadsheet or so.
So instead of trimming it, it's getting bigger. This is
You
working on my own
filter out
time
separate
trades.
setups and search for improvement. Yeah, I mean, we do. I mean, we know the probabilities. Once you, okay, so, and then, and I'm gonna have, and I'm gonna, and I'm gonna be honest. Josh may stick around, but I have to run at the bottom of the hour here. But Miguel, this is a really good question. I could sit here for an hour and discuss this stuff. So filter out setups in search of improvement. The truth is you only need 1 or 2 setups, and you need to own those setups, and that's where your improvement's going to become. And what I mean by that is if you have 2 setups that you know like the back of your hand and you know when they work, and so when I say for improvement, your improvement should be based on so the improvement comes in your management of your risk. Now you have to have an edge. We know that. Okay. And if you don't have an edge, and then part of what we talk about in our pathways is what is an edge, how to figure out an edge, what is the different types of trades out there. I'll give them to you right now. There's really 3 different trades out there. And they're all a variety of one another. And what I'm talking about is you have a breakout trade, what we just saw with crude. That's a break from balance. We saw it earlier in the indexes with in the Asian session. Okay, that's a break. Then we have what we call a trend continuation, which is just a pullback trade in a trend. Okay, and then we have a trend reversal, or we have a reversal trade. You can call it whatever you want. So there's 3 different variations of trades in the marketplace. Now we're not talking about options. We're just talking about this, just regular trades straight up into the marketplace. So your variation of those trades make up your trade plan and your setups. Okay, so I don't know the only thing you can really improve upon that is, okay, is it an actual setup? Okay, do I have the risk reward? Okay, and then how do I trigger into that trade? In other words, how do I get into it and manage it? Okay, now there could be more to that, Miguel, I'll give you that, but don't try to look for 100%. That's when I read that, I sort of think that you're maybe looking for 100%, but don't go that direction. Try to improve on your execution and management of that risk. I think you'll be better off on that. So sorry about that, Josh.
Oh, no worries. No, yeah, thanks for the question. Hey, we're gonna wrap up here and be done here at the top of the hour. So I am looking, and this is something for you just kind of watch. Where'd my annotation tool go? Here we go. I am looking, well, like right here. This is the type of behavior that I want to see. If they can hold this, I'll be looking to establish risk short, maybe against this high, and then looking for a return to 55.25. That's a trade that I'm interested in. This could just be a pullback before the next push higher. So I want to see them hold here and then break again to be short, and then I could use that as my risk. I do like the price value divergence there. We've also done some cleanup. So there were some levels that we were looking to clean up that we did clean those up. That's great there. If there's anything else that we can help you guys with offline, please let us know. We're happy to do that. And let me get back over here. If you're working on consistency, working on setups and stuff like that, or not yet part of our community, please consider spending a week with us. Number of calls throughout the week, looking at the principle of the auction and translating that into your actual trade plan and approach. Connect with us on Twitter. We also post daily decision levels, typically on crude oil and the ES on both Twitter, Instagram, and Facebook. And then always, if you ever, just want to get some feedback or anything, you can always send us an email at team@tradewithprofile.com, or give us a call, send a message at that number. And that is it. Have a fantastic weekend. Get some rest. We'll see what happens when Uncle Jerome speaks here in a little bit. hopefully that'll be fun. But appreciate everybody spending time with us today, and hope that it has moved the needle for you in some form or fashion. We'll send out the recording later this afternoon, and we'll be back again next week with another Q&A session.